Hi, this is Ian Coleman from PIA-First. This is this week's video analysis for the FX majors and the dollar index week 16th of July 2018. So we're going to start off with the dollar. We're going to break down the time frames highlighting what we're looking at for the week ahead. So the weekly chart in the dollar index in an impulse move to the upside, bearish outside week, posted very close to the 261.8% extension level at 95.27. We've also got this swing high area. So what we believe we're now in is a corrective formation to the downside. Obviously there's prime support around about 91, the figure. If we go to the daily chart, here we can see the bullish Elliott wave pattern to the upside. Now we're in this corrective formation lower, possibly forming a bearish head and shoulders pattern, so a left shoulder, sort of two heads and then a right shoulder, levels above 95, the figure getting sold into on Friday. A head and shoulders breakout would take us down to 92.14. Obviously need to break 90, around 93.90 for this to be confirmed. And then if we push through that level, we've got channel support coming in around about 91.60. So the bias is bearish in the dollar going into next week. So breaking that down into the FX majors, and we're going to firstly look at the weekly chart. So here we believe we're in a bearish head and shoulders pattern. 120.20 is trendline resistance. Mixed and volatile trading for the last 7 weeks, similar to the dollar index, obviously. If we go to this time frame, which is the 2-hour chart, here we can see pretty sort of overlapping wave patterns, if you like, stalled at the 61.8% pullback level, 116.16 on Friday. We've got trendline resistance at 117.25 going into the beginning of the week. Our prime target area, like we said before, is around about to 120, the figure for that right shoulder, but we have a 38.2% pullback level at 119.07, and we've got our bespoke resistance at 118.88. So that's sort of our prime target area going into this week. So we're looking to buy dips for a push higher. Cable. This time frame first, the daily chart, broken out of a wedge formation to the upside. We've seen a good correction lower. It hasn't retested the trend line, reverse trend line support is at 130.50. We didn't get to that level on Friday. We've seen this strong move to the upside. The measured move target for the breakout of this wedge is 134.40. We've got bespoke resistance at 134.54. And we've also highlighted this level. Okay, so 137.10 is previous support. It now becomes resistance. We've got a potential target level up here at 136.55. We're going to explain why we've come to that conclusion. This looks like a reverse head and shoulders pattern. Okay, an ABCD formation completed. Buyers coming in around about 78.6% pullback level. Measured move target, if we're to break higher through 133.85, is located up here, 136.50, which is this level on the daily chart. So dollar Swiss, we posted this chart on Friday, which was just basically highlighting that was scope for a fifth wave extension. Levels above and around the psychological one big figure are being sold into. All of Friday's initial rally was reversed. We've got reverse trendline support at 99.75, and then we've got our bespoke support at 99.52. So really we need to break this support zone for dollar Swiss to continue its move to the downside, and we're still quite bullish in euro Swiss. So we don't believe that the move to the downside is going to be very aggressive in dollar Swiss. Now, dollar yen, we've broken out of this monthly channel formation to the upside. Reverse trendline support going into next week is located around about 111.65. We've got our bespoke support at 111.32. Now, the reason why I'm wary of continued upside pressure in dollar yen is that I think that euro yen, Aussie yen, sterling yen are all getting close to sort of quite decent targets or resistance levels. So I've highlighted this here, which is 115.30, and that is also an area that's been pivotal for dollar yen for quite a prolonged period of time now, really. If we go to this time frame, and this is why I've highlighted that 115 sort of 50 area. The pullback on Friday could just be a mild fourth wave correction, and then a push higher to complete this last fifth wave in what looks like a big ABCD corrective formation. So what I'm going to just quickly do is just highlight euro yen, sterling yen, and Aussie yen before we go back to the FX majors. So euro yen, we've broken out of a channel formation to the upside. We've stalled, but dips are still being bought into. We've got an ABCD corrective formation located at 132.35. We've got our 61.8% pullback level at 132.38. Sorry, 58. That is the focus this week. To the downside, we've actually got support around about 130. The figure. Let's just move that up slightly. And we've got trendline support that's going to be coming in around about 129.40. But I'm not expecting too much of a dip in euro yen going into this week. And if you look to this formation actually, or this time frame, this is euro yen 2 hours. We look like we're going to focus up here 132.40, which would also be the top of the channel. Our first support is actually located at 130.95, and then below that we've got second support at 130, the figure. Sterling yen, and this is probably the most important time frame. ABCD has been completed. We missed the buying of the dip on Friday. We've got reverse trendline resistance at 149.17. So I'm not sure how much of an upside or continuation of that upside trend we're going to get. If we go to Aussie yen, let's just focus on this time frame. We've got a 261.8% extension level located at 84.04, and we've got our bespoke resistance at 84.02. So we're only about another 70 ticks to the upside before we're expecting some stalling in that yen cross. So, like I said, we are bullish in yen crosses at the moment, but the upside could be limited. Dollar CAD, broken out of a large triangle formation to the upside. Reverse trendline support is around about 130, the figure. If we go to this time frame, which is the dollar CAD 2 hour time frame, we think that we're producing or possibly producing a reverse head and shoulders, so left shoulder, head, and then coming down in a right shoulder. What I do like about this time frame is the fact that the channel support, if we do take an ABCD corrective formation from it, it comes up to 132.60, which is also very close to the 61.8% pullback level of 132.63. So going into next week, we are looking at buying into dips for a higher correction before bears return in dollar CAD. Aussie dollar, again, just time frames we're going to really focus on. Again, a left shoulder, head, right shoulder, reverse head and shoulders pattern. The reason that we've highlighted this level here is the measured move target comes in at 76 678. That's close to the previous swing high that was made in June. If we go to this time frame, it's very close to the reverse trendline resistance from this wedge breakout. So we've reacted higher from the 50% pullback level. A possible another retest of this trendline resistance, and then a continuation of the move to the downside. So again, we're bullish on Aussie dollar, looking to buy dips next week. Euro sterling, mixed volatile trading for how many days now? Seems like forever. Let's just put the measuring tool on. It's going to work. It's not highlighting. There we go. 63 days of mixed and volatile trading have formed a bearish ending wedge pattern. Last week we've tried to sell into rallies close to 88.80, looking for a sort of a bearish head and shoulders pattern. So left shoulder, head, right shoulder. Struggling to get up to those levels, to be honest. If we break support, which comes in at 88.20, then it's looking like we've actually got a descending triangle pattern, and the focus is to the downside. So at the moment, we're still looking up around here, 88.80, hopefully for a bearish signal. If we get a break of 88.20, then we could have missed that downside move. Okay, I hope you've enjoyed the analysis. If there's any questions, please feel free to ask us via our contact box, and we'll speak to you again next week. Okay, thanks very much. Bye.